Investors and traders, welcome to the channel Market Chart Pattern. Today is 14th of July 2024. I hope everyone is having a great day. In this video, we'll be taking a look at the key US markets. This video is a part 2 or a sequel to the video I did yesterday. In yesterday's video, we took a look at the US dollar also from a long-term perspective, and we took a look at the debt markets through the eyes of the US Treasury notes and longer-term bonds such as the long bond futures, which is the 30-year duration bonds. So I highly encourage you to actually take a look at that. And I will also post a link towards the end of this video and also in description for that video. And also for the gold market, I have done a really good analysis. It also includes some macro analysis done for the gold miners. And we believe that actually there is a fair amount of movement which is coming in the gold miners to catch up with the underlying commodity, which is the gold. So I highly encourage you to actually also watch that video. I will put a link to that in the description and also towards this towards the end of this video. As always, this video is for educational purposes only, and it is not a financial advice. So last week, trading week, was pretty volatile when the CPI data came out last Thursday, and what we have seen is something really interesting, and we'll just talk about that. Before we begin to talk, let's take a look at our timing model. So on the screen, what you see is the daily chart for the Dow Jones Industrial Cash Index, and here I'm not going to go into the detail of how this is constructed and what these lines are. I've done a detailed video about it when we began to start to take a look at this timing model, but the long time subscribers will tell you, and you can actually verify by looking at the archives, that this model has actually done pretty well for us, and with an uncanny ability really picked up key dates or the turning points in the market. Now, the most recent date we were looking at was the 1st of July, and here what we have seen is that we were watching for the date with 2 to 3 trading days either side, and we were looking at the price levels that as long as the price stayed above the 78.6% retracement, there is the possibility that a longer term or a bigger cycle is actually pushing the prices higher. And this is what we have seen. Actually, we haven't seen the 78.6% retracement being taken out to the downside, and actually last Friday Dow Jones on the cash index went and made new all-time highs. So this is really interesting to see. And the next key date, the big one, is coming around the 29th of August. So towards the month of September is what we are looking at. So we have key dates coming in between 29th of August 2024 and 10th of September. So I will pay really close attention to 29th of August and 3rd of September. That time region is really important. From a shorter term perspective, we do have a couple of dates coming up, which is one of them is actually Monday, which is the 15th of July and 17th of July. So next week, these few days, and then we have a smaller one around towards the end of the month, so towards 26th of July, which will be a Friday, and the month 29th of July. So these are the minor timings which we'll be watching, and the key one of course is from 29th of August to 10th of September, the key one. Okay, so let's take a look at what the markets did last week. It was a fairly volatile week in the markets, and this is the weekly picture, and what we see is that the S&P 500 gained actually 52 points for last week, about 0.93%. Nasdaq, on the other hand, actually lost 51 points, or quarter of a percentage point, and this is not to be surprised, because we do have a completed pattern on Nasdaq 100 index on the futures. So some resistance coming in there, some pullback happening. That is kind of expected, so we did see that. And then Dow Jones, look at that. So this was the one index which was actually lagging, and it gained 664 points, or 1.67%. And the real big surprise is the Russell 2000 with 127 points and a weekly gain of 6.22%. And most of these gains, actually pretty much all of these gains, came from last Friday excuse me, last Thursday and Friday. Last Thursday, we had the CPI data come in, which was dovish data, and what we saw was Russell 2000 jumping up 3% to close the day. Nasdaq, on the other hand, closed. There was a lot of volatility. Nasdaq actually closed 300 points, or a little bit more than 300 points for the day, and the S&P 500 was down as well. So I can actually attribute that towards a rotation going on, because the Russell 2000 stocks are the smaller cap stocks, and any news related to the inflation coming down a little bit increases the possibility of the Federal Reserve actually going ahead and moving the interest rates lower sooner. Is likely to help those stocks. The other thing is that with respect to certain days, these kind of days, how to look at this kind of data is that I publish the weekly and daily price movement for next Monday every time we do one of these. And if I'm not able to show them here in the video, then I actually publish them in the description, so you can always go and have a look. So the key thing is that if one of these indices actually is closing at or below the -2 standard deviation levels for the weekly ranges, then that is something we need to pay attention to. So what we saw was a lot of volatility coming in the S&P 500 and also in the Nasdaq 100, but we did not see these indices close below their -2 standard deviation level. So in fact, there was just no follow through the next day. So just give me a moment, and what I'm going to do is I will actually I haven't published. I'm going to take a quick screenshot of the standard deviation levels for the next week, and let me actually show those to you. It'll just take me a moment to do that, so apologies, I should have done it in advance to save time. There we go. And there we go. So these are the levels for the next week, 15th of July, starting from 15th of July, and I will also publish them in the description. So do have a look at the -1, -2 standard deviation and +1, +2 standard deviation. On the bottom, we have the daily ranges. That is for next Monday only, but the top half is for the entire week. Okay, now just a quick reminder, what we are actually also looking at is this. This is kind of our macro analysis for the summer of 2024. What we think is that we have got the US dollar likely to move lower, and we have seen dollar moving lower recently. The bond yields moving lower, or the prices moving higher. So we have seen that happen in the 2-year treasury note as well, which I discussed in yesterday's video. And metals being neutral to higher, that is off the back of the lower US dollar. And we have seen the gold and also silver actually being pretty stable, and actually now moving higher as well, even discussed more in detail in the gold video, so I encourage you to watch that. And lower yields and lower dollar should help the risky assets such as stocks. So still we are expecting the stocks to actually move higher, although some of these indices are hitting really key pattern formations, and we'll discuss more a little bit later on in the video about those. And commodities neutral to higher off the back of the lower dollar, but however the commodities have actually so far, such as corn, grains, they have been actually moving lower, but a lower dollar should help some of those pricing pressures. Now, before we begin to move to some of the other indices, I just wanted to also show you this chart. This is something which I discussed in yesterday's video. Just wanted to quickly recap this one. So here what we are looking at is the basically a ratio, and the way this ratio is constructed is we take the SOX, which is the semiconductors index, and divide it by the HUI, which is the gold bucks index, which contains the mining stocks for gold and silver. And when we construct this ratio, we get this chart, and in that we see a peak coming in the July of 2000, and that's when we had, from a tech perspective, the internet and .com. So that was the internet.com era, and the Fed fund rates were pretty elevated. They were actually definitely more than 5%, and I think in the month of July there were 6 point something. You can actually check that for yourself, just Google it. And now what we have going on is that we have this ratio pretty much testing the peak again, so kind of a double top formation. And here now 24 years forward, we have the blockchain and we are in the artificial intelligence era, and the Fed fund rates have been actually elevated as well, and they are more than 5%. So what I'm trying to say here is that it's possible that we, for example, in Nasdaq 100 index on futures, we have a completed pattern as well, and if we just try to put two things together, there's possibility that we could have some sort of a serious rotation in some of these tech stocks. And if the tech stocks, some money is going to move out of those, and those could be these high flyers, the mega 7 stocks, the mega stocks, where there's a lot of concentration and which has actually led this index really high. So some of those could have some pullback, and then the money could actually go elsewhere. And what we are actually seeing is that the gold miners, these are the companies which have been neglected for quite a long time, and they're for some of these companies which are actually profitable, but their prices are really depressed. So we are seeing some movement happening in the gold miners actually. So they are worth taking a look at, index of GDX and some of the individual stocks. So that's why I highly recommend you watch the gold video, because we discussed that in detail. And just another point on that is another chart. Really quick look at this, and this one is the gold bug HUI index ratio to the gold price itself. And here what we see is, look, in the November 2000s, that's when a bottom came in, and there was like a breakout of this range, and we are in a similar kind of situation. This is where the gold was actually starting a bull market, but here the gold is already in a bull market. So what I'm trying to say is that it looks like we have a multi-month move happening in gold, so that we should also pay attention to that. All right, so with that, and now what I'm going to do is I am going to start to take a look at the key markets, and we'll start with Europe first. So let's take a look at the FTSE 100. Here we go. So this is the daily chart for the FTSE 100, and what we can see is that it's been a range bound, and also in the United Kingdom we have had elections here, but it remains firm right here at this level, 8,117. Excuse me. So the chances are it's actually, finding pretty good support from here, and it has actually completed its correction based on the market symmetry concept that we really like to take a look at this channel. So that was the previous correction by about the same amount, and if this market is ready to move higher, then we could see it reach 8,560, and even 8,670 might also be a possibility, where we'll have a number of confluence ratios coming together. We'll have the big ABCD completing, and also the 1.6 minute expansion of this entire range, or the BC swing. And when we take a look at the German DAX, here we go. This German DAX looks very interesting. It's very strong. Last Friday it was in fact very strong, because it took out these highs and starting a new swing, and the chances increase that it actually wants to go and test these highs and also complete the 1.6 minute expansion of 19,162. So the European markets are pretty strong. So we also took a look at some of the international markets, because they do play a role, because it's just a big cash chart of big cash moving from one market to other, and the US investors are really big investors. They also like to invest in international markets. Okay, now we are going to go and take a look at the US stock indices. So let's start by taking a look at the Nasdaq 100, and I'm going to move over to the weekly chart. Here we go. So here this chart is really interesting. We have discussed this pattern before, so I'm not gonna discuss too much in detail from a technical perspective, but it is a completed pattern. So ABCD moves one-to-one price projection really goes back to the COVID lows of March 2020 to the highs we had in November of 2021. We projected from the lows of October of 2022, and we get a level right here. And Google is actually the company is exhibiting exactly or a very similar pattern as well. In fact, it's the same pattern in Google as well, 194. So that's very interesting what is happening in some of these tech companies, individual names as well. So what we have seen last week is a little bit of a pullback. That's kind of expected. Market did not close below the -2 standard deviation levels. So what could happen is, in my opinion, is with the aspect of rotation. And if there's going to be a pullback, I don't think at this stage, at least till our key dates in September, it's going to be a massive pullback. Maybe it could be 5-6% pullbacks in the equity markets, or they can just go, in other words, sideways. Now, so this is the completed pattern. We're just watching the price action for this one. And if we take a look at the SPX, so here we go. Here we go. So SPX actually has also gone into the target that we were watching for. That is this 1.618 expansion of this BC swing at 5,651. But the interesting thing is that it, unlike the Nasdaq 100, it has not completed its ABCD one-to-one price projection, which is this big black cycle here, ABCD here. So one scenario is that maybe this index actually plays a catch-up, and it also tries to complete this big pattern. So what will happen with the Nasdaq 100 then? It could either go in a trading range. So in fact, what will be happening on the surface is rotation, or what could also happen is that it could go even higher as well. So those possibilities remain on the table. We'll have to wait and watch and see what is likely to happen. Also on the futures chart, here we go. It has also actually exceeded a little bit of our price level that we were watching for, and the big ABCD will be complete around 6,095. So that's a level to watch. And then we have the YM, which is the Dow Jones. This one is really interesting because it has gone and made a new all-time high on the cash index and also on the futures chart last week, which is really interesting. And here what we see is it had this red ABCD completed around here, but the markets are stronger. So looks like it might also want to play a catch-up. Similar scenario to S&P 500. We'll have to wait and see whether it will also complete its big ABCD, which would in fact see it at 47,000, which seems a long way from here. But that's what the projection we are getting. An alternative scenario is between now where it is and between 42,000, we could see the market actually topping, and then we get into some sort of a correction, because that will be the 1.618 expansion of the BC swing. Okay, and then last but not the least, let's take a look at the Russell 2000, because this is where the action was last week. And here, look at this, just fantastic move, 6.22%. So this actually adds to my conviction that what we have actually seen last week is a rotational aspect, where the expectation for off the back of the softer CPI data, a rate cut coming in sooner from the Federal Reserve, in fact coming in as soon as September, the possibility for that increased, and that led to a catch-up in these small caps, where the funds managers are putting money in the small caps because they are very interest rate sensitive stocks, smaller balance sheets, and we do have a bigger pattern completing, which will be around, you can see 2320, 2370, 75 roughly, in that ballpark figure. So 2280 to 2370 is the kind of 78.6% retracement and bigger ABCD completing. And if we just zoom out a little bit, what we can see is that it's been stuck in a big range. It just retraced 50% of its move from the back of 2020 to the highs of November 2021. And I'm not we'll have to wait and see whether it'll be able to do a big ABCD and kind of do a catch up, the possibility we are looking at in S&P 500. So that's what we're looking at here. And last but not least, I'm saying it for the second time, is the New York Stock Exchange Composite Index, and it has gone and reached our target of 1.272 expansion, which is good as well because it is pretty strong, and it's got further move higher as well possible, because 1.618 expansion comes in around 19,980. This includes ADRs, foreign stocks listed on New York Stock Exchange. It's a really broad index. It's looking strong to me. So, there's a lot of talk about yes, some softer data coming in, but also we have in regards to employment, but we also have inflation moving lower as well. So the markets are forward looking, and they have been looking for a rate cut. And if we are able to get one rate cut with the possibility of second rate cut coming in 2024, then at least for the year of 2024, we could be in a scenario that the market could actually be kind of in a scenario it's melting up higher slowly. 2025 could be a totally different market, could be totally different kind of patterns that we'll be looking at, because a lot of these patterns that we are watching and the levels that we are watching, we might have actually completed those. And if we have completed those in pretty much all the key markets that we watch, then that's going to be a really interesting scenario to be taking a look at, because this means the markets have actually come in sync, because they have made those big ABCDs from the lows of March 2020 to the levels that we are forecasting. Markets are in sync. What's going to happen next? That will be the big question. So there we go. That's our view, at least till the end of summer, or at least till September of 2024, what the kind of projections we are looking at in the market. I hope you have found this video of educational value. If you did, give it a thumbs up. Please do like the video, and if you like our analysis, then please do subscribe to the channel, and if you do, then please do hit that bell icon button. That way you will know when the new videos are posted. Thank you very much. Good luck with trading. Speak to you guys soon, and have a fantastic weekend.